So down payment, how much does a person really need when they buy a home? And this takes me back to step one. It really depends what you get pre-approved for. And that's why we have that as step one. It's super important. The majority of our clients fall into one or two categories, FHA and conventional. Now, FHA is a little bit more lenient when it comes to qualifying for this type of loan. Lower credit scores, lower down payment, and it's typically cheaper to close. If you qualify for a 3.5% FHA and you're looking for a $500,000 home, that's around $17,500. Just like any loan product, there are pros and cons. 3.5% is great, but what are the disadvantages of going with an FHA? FHA is an awesome program. I'm not saying it's bad and you shouldn't go with it. I'm just saying be aware of the pros and cons of each loan scenario that you and your lender and or mortgage broker discuss. So the negatives for the FHA would be in the eyes of a lender, right? Again, thinking about in the eyes of a lender, this person has lower credit score typically, so they're higher likely to default. How does the lender protect themselves because this is a higher risk borrower, right? And so that comes in the form of private mortgage insurance, also known as PMI. That additional cost gets added onto your monthly mortgage, and that makes a big difference sometimes. And another drawback of an FHA is typically it's going to be higher interest rates. There are city-county limits to how much of an FHA is allowed. So you can't just go into Beverly Hills and just, hey, I want to buy this $10 million home because at 3.5%, I got $350,000 I can play with. It doesn't work like that. There are county city limits, so definitely check that out, or ask your mortgage broker and or lender about the limits of certain areas. Conventional loans are a little bit harder to qualify for. You need definitely a stronger income. You need to make a little bit more money, higher down payment, and higher credit. So if you qualify for a conventional loan on a $500,000 home, the minimum down payment is 5%. Now there are programs with 3%, but most of our clients opt for the 5% or more. So I'll use the 5% example. 5% of $500,000 is around $25,000, right? So that's a $7,500 difference in down payment costs compared to that of the FHA loan. Now the question becomes, which one is better? And honestly, it depends on you and what you discuss with your lender and or mortgage broker. Are you willing to have a lower down payment, but you're okay with the higher rates? Or do you want to save up a little bit more for your down payment and have lower rates? That's a personal decision that you have to discuss with your lender and or mortgage broker. Make sure everything's on paper before you move forward. And just because you get pre-approved, by the way, doesn't mean that you're locked into anything. It just means we're getting everything on paper. Guys, it's about creating a blueprint for the next 2 or 3 years sometimes. We get people pre-approved and they're just not ready, and that's totally 100% okay. As long as they're able to make confident real estate decisions, as long as they can look at everything on paper and make good decisions. There's no rush. So don't be afraid to get pre-approved or speak with a mortgage broker and or lender. Now, some people are very high salesy, high pressure. You don't have to work with them, right? There's no pressure, there's no obligation. Work with the people that you trust.